Welcome to the Edozo Property Podcast, bringing you insight and inspiration from thought leaders in commercial property and technology. We hope you enjoy the show.
Today, I'm delighted to be speaking to Tom Davies and Sam McGirr, the co-founders of Bloom Developments. Bloom is an investment and development company that transforms underutilized real estate in central London into ultra-urban warehouses, creating high-quality spaces for e-commerce, on-demand food delivery, and logistics operators who struggle to source suitable industrial and logistics warehouse facilities in central London. Last year, Bloom entered into a £250 million joint venture with the real estate private equity group Angelo Gordon to scale an ultra-urban warehouse and logistics portfolio in London. In the last year, they have built a £125 million four-asset portfolio with another 125,000 square foot of opportunities in the pipeline. Tom and Sam are true pioneers in this fast-growing and exciting commercial property category, and I'm excited to hear more about their journeys to date and ambitious plans for the future. Welcome, Tom and Sam.
Thanks very much for having us, James. Really happy to be here.
Absolutely. Guys, I'd love to know the story behind Bloom so far. Starting with you, Sam, can you briefly explain your background and how you came to creating Bloom?
Yeah, so my background was initially in the London office investment market, a company called GN2, focused on West End and city office investment. I'd always had ambitions to move into development and to do a couple of years abroad. So I moved to North America and ended up in Vancouver. I was working for a company called Form Development, who are a design-led urban mixed-use West Coast developer. So they had projects in both Vancouver, but also in Los Angeles. So I was based in Vancouver, but working between the two cities on high-rise and hotel projects, but usually with a component of commercial or retail space. Tom and I have always kind of discussed work and business in the kind of 10, 15 years that we've known each other. And while I was away, that kind of increased as we got a bit older. And we were talking about the big shifts that were happening in the logistics and industrial space and how that last mile, last meter element of the supply chain was becoming more and more important. Tom was obviously seeing it firsthand at Segro. And yeah, I'll let Tom introduce himself and tell you a little bit more about Bloom conceptually.
So thanks very much, Sam. I spent my kind of formative years straight out of doing our masters together at Reading. Sam and I kind of did our masters together there. So my formative years working at Segro, who are the largest owner and developer of urban industrial estates across Europe. And slightly less glamorous than Sam in Vancouver, I was predominantly working on the Slough trading estate, otherwise known as Slough Bados, which gave me a great insight into industrial occupiers and the different types and the key requirements. I lastly focused for the last kind of 3.5 years of my time there in the London development team. So I was looking at bringing forward multi-let and mid-box industrial estates within the M25 in London. So supporting the acquisition of these sites and then delivering them through and letting them or selling them. And whilst I was there, Segro were looking at potentially these more central markets for logistics operators predominantly. Whilst I appreciate it's probably changed, at the time, there was a bit of a kind of shift with DPD and others taking more central space, which we'll get touched on a bit later. And Segro and others were looking at trying to create inner city space to give their customers the full spectrum of warehouses across the supply chain. So inner city, edge of town, traditionally where industrial estates are located, to regional distribution centres and national distribution centres. I've always wanted to run my own business and had done actually for 8 years before, running an events business on the side, but left a couple of years ago to join a startup accelerator called Antler to basically build a logistics company, and looked at it for a while, but moved away from it, started focusing on data analytics and started building a business in that space, but couldn't get rid of the logistics last mile itch that needs to be scratched. So started talking to Sam about some of the trends I was seeing in the market and the opportunity I saw. And then we basically started going and speaking to people, speaking to funders, speaking to operators, speaking to owners, and trying to find and build a site pipeline, which eventually progressed to us looking predominantly at industrial logistics estates and trying to repurpose these and breathe new life into them to create effectively a portfolio of ultra urban, i.e. inner city warehousing and multi-let industrial estates of high quality with a key focus on sustainability. And we've been really lucky to coincidentally bump into Angelo Gordon and have agreed a initial joint venture with them to start focusing on this market over the next kind of over the short to medium term.
Yeah. And look, I mean, logistics operators have needed this type of space for a while. Can you take us through some of the other innovative businesses who have this type of requirement and your typical occupier profile that you're targeting?
So for the on-demand grocers, their requirements, again, because they need to be so centrally located, it's difficult for them to actually be on multi-let industrial estates, because even if it takes them a minute or two to leave the estate, that has a big impact on the delivery time when you're promising customers you're going to be there in 10 minutes. So we've actually seen some of the on-demand grocer guys take what is traditionally retail space or E-class units and incorporating a click and collect component to their business, which they don't really want, purely to be located in a high street or somewhere that's even closer to their end customer. You know, you've got the classic NIMBYism of people wanting food delivered hot and fresh nearby, but not wanting a load of riders on their streets. Because they use the third-party gig economy riders to deliver the food, they have less control over loitering drivers or noisy scooters, which can cause issues with residents. So they've got to pick areas where they're going to be supported from a planning perspective from the local council, and as well sites that have, you know, enhanced ventilation for obvious reasons, preparing food and things like that. And self-storage guys, which we touched on, are quite interesting because they only require kind of 2.5 meter height to put in their storage units. So there are lots of sites where they can get in perhaps an additional floor that another occupier can't get in, and consequently make it more commercially viable than a different style of occupier.
Tom mentioned you speaking to a bunch of occupiers in the early days. Sam, could you tell us a bit more about those conversations and how it sort of helped you to form Bloom?
This was a really important thing for us from a sort of concept proving standpoint. And there were three main reasons, you know, why we went out and spoke to the occupiers. That first summer, I think close to 150 occupiers that we interviewed and had set up calls with, trying to extract warm intros where we could get our points across. But the first was that we had this idea that these companies need to be located more centrally. We knew it was true of the logistics sector. We'd seen DPD set up a micro hub strategy in Shoreditch and Westminster, take space in Zone 1. But we thought this is probably true of a much wider array of companies, including retailers and a load of other guys. So we wanted to test that. And we thought to some extent we were going to have to sell the idea that people need to look at changing their strategy. But we were actually blown away that most of the people we spoke with said, we know we need this space more centrally. We can't get it. It doesn't exist. Do you have some? So that was a big positive. And the second major reason we wanted to speak to the occupiers is to understand what compromises could be made for these sites. So when you're in these really central locations, the sites are very constrained. You're dealing with a load of complex issues that you wouldn't have at more traditional institutional industrial locations because you're so close to resi, the public realm, the public in general. And so we wanted to understand what compromises in terms of yard depth, in terms of the vehicles that they used, in terms of what the space looked like, how it was designed, were occupiers prepared to take in order to be in these more central locations, and what areas were completely fundamental and couldn't shift because clearly, you know, we weren't going to be able to deliver the institutional grade industrial space that you might get out in the Midlands. A good example of that actually is a big reason for these occupiers locating more centrally is to use smaller electric vehicles, become more sustainable. So most of our sites, I think all but one, we don't accommodate any articulated lorries. We only accommodate up to a 10 meter rigid. So it was understanding those sorts of compromises and what specification occupiers really cared about. And the final reason we were keen to speak to occupiers is obviously setting up a fund of this type. We thought we were going to have to differentiate ourselves, given that most people doing this have long, 20, 30 year track records of doing it as a principal, slightly older. And so we thought, well, how can we differentiate ourselves when it comes to attracting, institutional investment to back us? And really aligning ourselves to the occupier and understanding exactly what their needs were and building up long-term relationships with those occupiers and having an in-depth sort of expertise of how their businesses functioned, we thought would be really crucial. So we thought before we do anything else, let's just speak to every occupier and really gauge how they operate and what they need.
It's really smart. It's starting with the end user in mind and working backwards to form a property strategy around them. And how did you come to speak to Angelo Gordon?
We actually got introduced to Angelo Gordon by Fifth Wall, who I think at my last check are the largest prop tech venture capital fund globally. Angelo Gordon are actually one of the investors in various Fifth Wall funds. And I'd been super fortunate to work closely with Fifth Wall during my time at SeaGrow, where I was involved in helping test and update the company's prop tech strategy. looking at key areas of potential disruption for the sector and ways for SEGRO to drive efficiencies, create value, and de-risk certain areas. When Sam and I were speaking to funders on what was effectively a Zoom roadshow, because it was in the middle of COVID and lockdown, I reached out to Miguel Navarra, who is one of the European partners. Coincidentally, at the time, Fifth Wall were actually exploring making an investment in the quick commerce space. We were pretty close with quite a few of those operators. So given our kind of market knowledge in that area and also kind of being in the right place at the right time, Fifth Wall kindly asked if we could join a webinar on quick commerce and inner city warehousing to tell their LPs and investors about some of the new interesting trends, stuff around dark stores, micro hubs, dark kitchens, etc., and some of the occupiers that were taking advantage of the new consumer habits and trends. We just about bumbled our way through the webinar, and Angelo Gordon followed up as they owned a car park in central London and wanted to hear our thoughts about what they could potentially do with it. So we got talking, took it from there. But it's quite amusing, really, because Sam and I had been spending endless days and nights thinking about different funding partners to approach, how on earth we were going to get warm introductions. And without intending to, we almost kind of bumped into Angelo Gordon in a bar. But it's been a fantastic experience so far with Angelo Gordon. They're super supportive and we're really pleased. They're equally excited about the opportunity that we see.
Well, that sounds fantastic. Back to the occupiers for a second. What are the key drivers for locating their businesses more centrally and next to chimney pots?
Yes, it's a super important question and one that we're kind of still, testing and validating every day. Our aim as a business is to create high quality warehouse space for our customers and occupiers so that they can effectively better serve their customers, which is often the end consumer. And ultimately, it's changing consumer habits, which is driving many occupiers to change how they operate and where they're located. And you're seeing lots of new business models transpire to try and capitalize on these trends like dark kitchens, on-demand grocers, e-mobility, vertical farming, etc. Digitalization and e-commerce spending is increasing the need for warehouse space to fulfill logistics and deliveries. And the UK is the most advanced European nation in terms of e-commerce penetration. I think e-commerce accounted for 19% of total resales in the UK during 2019. During the pandemic, this figure reached as high as 50%. Whilst the pandemic has accelerated e-com spend with people at home unable to go to the shops, many of which were closed, we're firm believers this trend will continue to grow. Now, coupled with consumer preferences for convenience and instant gratification, there is a real growth in the need for inner city warehousing next to chimney pots and the CBD, the central business district, so that goods and services can be delivered to the end consumer or businesses rapidly. Only recently there was a drive towards next day and same day delivery. Yet now there is a growing shift towards instant consumptions of goods and services, which is already happening in China and the US, and typically the UK is a few years behind. A lot of people at the moment don't want to wait 2 days to receive their Tesco groceries or their ASOS package. And the Amazon effect of offering instant consumption has driven other businesses to offer the same as a standard service or struggle to complete. In terms of the London market, quick commerce in the grocery vertical has been a big trend in the last 18 months. There have been loads of new entrants in the market who offer 10-minute grocery delivery from order placing, which is just unheard of. These guys have raised over $1 billion each off the back of rapid uptake in consumer adoption. And consumer habits are changing. And we anticipate this to happen in other verticals like fashion, pharmaceutical, electronics, retail, e-commerce. But the reason we see ultra-urban warehousing as a great opportunity in real estate terms is there is increasing demand for occupiers to be located in inner London, where there is already extremely limited high-quality warehouse space or land, as a huge amount of older industrial land has been sold for higher value uses like residential.
Amazing. I find it fascinating that someone delivered something in 8 minutes to my door last week. So could you tell us a bit about their specific requirements? Because I live in Southeast London. They're obviously guaranteeing this in loads of different boroughs. When they come to you, what is the sort of typical occupier requirement for one of your ultra-urban warehouses?
Yeah, so for on-demand grocers, mostly centered around, the immediate proximity to their customer. Obviously, you need to be centrally located if you're doing same day delivery or same hour delivery. But when you get to that kind of 10, 15 minute delivery is fundamental to your whole operation. So, even having an industrial estate that it takes a minute or two to leave is a big problem for those guys. They need to be right in close proximity to chimney pots and the demographics that they want to sell to. And they're very driven on using data to work out where their location should be. On the whole, they take slightly smaller units, probably between 2,000 to 4,000 square feet. They don't like anywhere that's got restrictions on the hours of operation because they have to deliver goods on a daily basis in the early hours of the morning to accommodate people ordering at speed throughout the day.
Just to add to that, that's one specific customer one specific potential customer for us. But what we're doing as a business is generally trying to create those modern, high-quality industrial estates, which are multi-tenanted, to target a diversity of different occupiers across modern and traditional industrial and logistics. So on the kind of traditional side, there are operators like self-storage, film, food and beverage, production, manufacturing, building supplies, post and parcel. And on the kind of newer business model side, there's dark kitchens, on-demand grocers, etc. So we're trying to create that space that enables them to have a home in these more central areas to deliver on their promise to the end consumer.
It's fascinating. It's certainly a hot investment category, I'm sure, at the moment. What attracts the likes of, say, Angelo Gordon to make such a huge investment in this type of property? What are they looking at into the future? Is it rental premium, rental growth?
Yeah, well, I don't want to speak necessarily on their behalf, but when we started speaking with Angelo Gordon, we were delighted they shared our passion for ultra-urban warehousing and how we could provide the type of high-quality, sustainably driven warehouse space so needed for occupiers in these more central areas. In simple economic terms, with a supply and demand imbalance comes more competition, which drives pricing. In real estate, this effectively boils down to rents increasing and property values increasing. And warehouse rents have increased in London drastically during the last few years. However, what we find really attractive is that the niche inner London warehouse market is still, in our view, at its infancy stage. The trends of e-commerce penetration and instant gratification that we'll touch on a bit later are going to continue driving more and more businesses to locate centrally, in our view. Rental growth and forecast market adoption, coupled with the difficulty of creating a load of new supply in this market in the next 3 to 5 years, makes the investment environment super exciting. What also excites us is the opportunity to help provide a positive impact on the built environment through design-led, sustainability-driven developments. Most often, we're looking at purchasing older, underutilised industrial estates, which have a far worse impact on the environment generally than our proposed new developments. And I personally find it particularly exciting as we're working in a super modern, innovative and exciting sector with loads of super bright people and entrepreneurs thinking differently and creating new business models.
So you guys launched Bloom during the pandemic. How did this affect your business?
I think we were very lucky in some ways. Obviously, the pandemic was tough for everyone and tough for us. But from a business standpoint, I think we were quite lucky. Firstly, it exacerbated all the trends and themes that we've been talking about and brought them to the forefront, I think, of both occupiers and the end consumers' minds. And what was already happening but might have taken 5-10 years was kind of squeezed into an 18-month period as occupiers and businesses realised they needed to change their models around new consumer behavior. We saw restaurants, even upmarket restaurants who would never have previously considered it, suddenly having delivery and takeout components to their businesses that they've continued doing since. Big swathes of the population, especially the older generations, increasing the amount they ordered online and then realizing, that's actually an easy way to do their shopping and continuing beyond that, which obviously has its own implications for e-commerce and for what we're doing. So it was great from that side, but it was also good from a kind of pragmatic standpoint. As Tom's already mentioned, when we first started, we basically had no money. We're working at my small kitchen table, but having these calls with big investors and institutional real estate companies who on the whole sort of assumes that we were doing it from a kitchen because it's lockdown and, that we had an office somewhere, which of course we actually didn't. All the big service firms panicked in lockdown and massively reduced their graduate intake. So there were all these high caliber graduates who suddenly didn't have jobs, who were willing to take internships with us, perhaps wouldn't have done previously, given at the time we were pretty unknown 2-man operation without office space. So there were a load of unforeseen benefits that I think we didn't really consider, as well as, of course, those major trends that underpin our actual business model.
Yeah, and you touched on the sustainability element of your developments, both in design and then, Sam, you mentioned the e-bikes. So what are your initiatives that you're taking and what demand do you get from occupiers for making your buildings and processes more sustainable?
So sustainability is a key pillar of Bloom's values as a business. We are a business with an average age below 30, and we're hugely conscious of having a positive impact on the environment and social for future generations. Our developments are all targeting some of the best green and sustainable accreditations out there. We're targeting BREEAM Excellent, which is a top rating for assessing the sustainability of properties and developments. We're also targeting EPC A+, which is another top accreditation which focuses on energy performance. We want to create buildings which are super energy efficient and produce clean energy. Social is also a key pillar for us. We're always looking at ways in which we can have a positive impact on the local community and the area we're investing in. In terms of occupiers and their requirements and demands specifically, there is a real drive from many of the businesses operating from warehouses to have a positive impact on the environment and become carbon neutral and limit greenhouse gas emissions, effectively ESG. There are a variety of occupiers looking for buildings with leading sustainability ratings and the potential to limit their impact on the environment. And ultimately in the inner London market, where we are focused as a business, there just aren't many buildings that actually suit these occupiers. Supply is lacking. Sadiq Khan, the Mayor of London, has set a target for London to be net zero by 2030. Planning policy and government bodies such as TfL and Greater London Authority are driving green logistics initiatives to reduce congestion, carbon emissions and improve air quality. And this is having an impact on various potential customers of ours who use delivery vehicles. So for example, post and parcel businesses like DPD, UPS and Royal Mail are all investing heavily in electric fleets. The same can be said for Ocado and Amazon, and also the on-demand grocers, amongst others who are using electric vehicles. These guys are looking for high-quality, sustainable warehousing, which is enabled with the necessary infrastructure for the future of vehicle fleet electrification. And our estates, in particular, we're using solar panels to generate clean energy. We're putting electric charging infrastructure, enhanced electric charging infrastructure at every parking bay or loading door. And we're looking at delivering enhanced power capacities to enable larger electric fleets. We want to give these occupiers buildings with the sustainability infrastructure they need for now, but also the long term.
What are some of the biggest challenges you face at the moment? You're a young business, so the challenges you face growing the business, but also finding sites in London.
From a business and operational perspective, there's the usual areas around hiring top talent as a young, newish business is never easy. Convincing people to come on the journey at a stage where you are young and it is, all hands on deck and you're not necessarily just doing your role, you're getting involved in loads of other areas in the business. Managing cash flow versus the opportunity cost of investing more now to scale faster, as well as running a business and having an operational or technical skill set, which I don't think is actually often that talked about. For example, I'm not sure people often talk about this, but all of the corporate stuff of running a business is very time consuming, like accounts, HR, tech, marketing, tax, legal. Ultimately, while Sam and I are entrepreneurs, we also are real estate people delivering development projects and finding the opportunities to acquire sites or create value. So it's really about balancing this correctly whilst we're relatively resource strapped to ensure we continue to progress and grow at the rate we want. In terms of the market specifically, there is a lot of market talk at the moment and press about new entrants in the market, whether it's industrial developers, residential developers or investors or owner-occupiers who are competing for the same real estate and sites that we are. They are driving up the values and competing on sites also for occupiers that we want to be targeting as well. We personally still think there are attractive opportunities out there where we can source decent opportunities for us and don't want to get too caught up with focusing on the competition. Whilst they're clearly a threat, if we spend all day focusing on them, we wouldn't be finding any opportunities. The planning environment is also tricky. There is a big push for residential at a government level, and yet it's super important. We recognise the importance of industrial property and warehouses to serving our economy and people. I think in the last 10 to 11 years, we've lost over 100 hectares of industrial land in London every single year. And generally, once it's gone, it's very unlikely it'll be coming back. So it's a very supply-constrained market that we need to be conscious of continuing to protect and foster. There's been a lot of talk recently about the construction market being tricky and construction pricing and costs increasing significantly. There's been a backlog of development projects happening this year. There have been labour shortages due to Brexit and building supply shortages due to the supply chain difficulties from the pandemic and also the changing environment with Brexit. But we're always trying to keep an eye on these challenges, risks and threats on our business. Ultimately, at the moment, we're really fortunate to have a good balance, a great young, driven team and a super supportive funding partner, Angelo Gordon. Fingers crossed we continue that way.
Yeah, absolutely. And as you grow and as people get to know your business, I'm sure opportunities will come your way. And on that, what are your typical site requirements and how do you source those opportunities? So
for us, what's super crucial and where we're slightly different is we're very focused on inner city zones 1 and 2 specifically. That's all we do. We've got long-term focus in London at the moment, but we do have ambitions elsewhere, but there will be in other cities that are similar to London so that we can focus again on that inner city component. So it's very focused from a geographical standpoint. The next probably most important thing is to be in areas where industrial redevelopment is going to be supported. Tom touched on some of the GLA wider policy, do want to protect and support industrial space and industrial intensification, but obviously given the mix that you're going to have in central areas in terms of all the other users in the built environment, there are areas where it's clearly not feasible. So on the whole, we look for KEBAs, which are key industrial business areas, which is basically areas designated by local authorities for industrial redevelopment or where it's likely to be supported. So if you're in a central area and it's supported for industrial development, we'll almost definitely take a look at it regardless. The third component on top would really just be size. Our sweet spots of anything from 0.8 acres upwards, probably between 1 and 2 is the real sweet spot. But again, if those first 2 boxes are ticked, when it's much bigger or even a little bit smaller, we're still going to have a look.
Great. Fantastic. Well, we've got over 5,000 users of our software, many of whom are in the agency development world. Do you accept introductions from agents and third parties, or do you very much find the sites yourselves?
Yeah, so I think it's changed a little bit as our journey's gone on. When we started, we were having to do a lot of boots on the ground, going and speaking with private owners and trying to source deals ourselves. But now the market has a bit of an understanding about the funding that we've got, and we've built up a track record having purchased 4 assets to date. So we get a lot more inbound from agents. But ultimately, for what we want to do, off-market opportunities are still the ones that suit us best. And so consequently, we are still keeping a component of that boots on the ground, speaking to privates, trying to get out there and find deals ourselves, which is obviously really difficult, but has brought us success to date. And 3 of those 4 sites that we've bought were all off-market acquisitions.
Knocking on doors hasn't always worked out our way, though. Me and Sam have been chased out of numerous buildings. Whilst walking down the street and just seeing a building, we used to just get in a car and drive around other areas in London, just down small streets to try and find sites and try and drive into them. And we've been shouted and walked out of many car parks and other industrial sites before.
That's brilliant. And look, you're obviously going to grow the business. You're well funded. You've got a great model. I imagine you've got the occupiers on side too. What are your plans for Bloom over the next 5 years?
I think our dream as a business is to be an investment development manager for the long term. We've been really fortunate to get where we are in the short term. And to be honest, we're much further ahead than we thought we'd be. And that's, I think, is just down to the amazing support we've had from Angelo Gordon. We do have aims to expand into Europe and potentially other large UK cities where the investment environment and dynamics are suitable. But we are a young business with young founders. And whilst we've been incredibly fortunate to have such a fantastic partner in Angelo Gordon supporting us, it's really important for us that we stay laser focused and deliver on our promise to develop a track record. So we're just trying to keep our heads down at present, and hopefully the future will look bright.
Amazing. Well, gents, we'll be watching your business with interest. I'm sure you're going to grow from strength to strength. It sounds like at your rate of acquisition, we're going to have a conversation a year's time and see how much you're growing. So thanks so much for coming and speaking to us, and good luck.
Thank you very much, James. It's been a real pleasure, and looking forward to keeping in touch and likewise seeing Edozo's journey evolve.
Brilliant. Cheers, gents.
Thanks for listening to the Edozo Property Podcast. To find out more about Edozo, please visit edozo.com or follow us on LinkedIn or Twitter. Links are in the show notes.